Hey guys, Jason here for TheChartGuys, taking a look at Netflix. Netflix had a nice inside bar setup that was completely negated with a lower open. I don't play inside bars that don't have a break in regular trading action. It just takes the emphasis away from breaking those key levels. But that's what happened today. We saw a nice green candlestick. We had a big flush to the downside. Bulls bought this dip. We are edging on oversold territory, so it's not going to be unexpected to see a nice little upswing until we get EMA resistance. Now the bulls can make a pretty big choice. Actually, they need to come up and they need to get a high over 336.40 to look at changing this to a daily uptrend, or if they get a low underneath or a lower high under 336.40, we're looking at a daily downtrend. So we'll see what happens there, but right now my focus is going to be on a good green follow through on this little weird looking hammer with a little bit of an upper wick here, looking at EMA resistance. So EMA 12 would be on deck. Tomorrow's action probably has it in the area of 315 to 318, something like that. So just pay attention to the daily charts. Look for that slowdown. On the 4-hour time frame, we're still very much in the 4-hour downtrend. I'm not confident with this trend change. There's a higher high here, and it looks like we even have a double top or high on this candlestick, 312.42. 312.23, so that is a lower high and a new lower low. So bulls need to stay above the key level 296.81 and get a high over 314.42 for a 4-hour trend change, which is going to let them show a little bit of that daily strength that we need to see. There's that range, double top 312.42. That is going to be a key level if we're going to see some green action tomorrow. And here's that big drop, bulls buying the dip and just consolidating ever so slightly against EMA 12 resistance. We need to see them break over that in tomorrow's action, get over EMA 26 as well, and then take out 312.42. If we get over 312.42, that's going to be a pretty substantial move, and then that gets us into the range of that daily EMA 12. Should we see bearish action tomorrow, our next resistance, or our support rather, is not for quite a ways, 231.23. So we will look to our RSIs and our oversold bounces to carve out new support on the way down. Hey guys, Jason here for TheChartGuys, taking a look at Amazon. Yesterday we talked about this weird hammer, momentum hammer, buying at the dip, and it was just in a weird place, and it wasn't a green close, and it showed some weakness. We saw further weakness in the after hours and the pre-market. Ultimately, we opened low, saw a big flush to support levels, and we had a relatively okay close. Not a lot of conviction or direction either way, and we're setting up for a possible bear flag. So bear flag is when you get into a little bit of a downtrend and you get some contained action looking like that. Don't go beyond this setup. Lines are a little sketchy, but that's the idea. You have a down move, you have a sideways, slightly upward consolidation, and then continuation of the downside. Right now we're fitting inside that narrative of a bear flag. We'll have to see what tomorrow's action brings us, but we are seeing some hesitation on both sides. We'll see what plays out. On the daily time frame, we have support at the low 1753.40 is a better way to say that number, and then we have daily support as well at 1715.25, and then finally 1672. Daily resistance is going to be our EMA 12. That's not for quite a ways yet, so we're going to be looking for overbought conditions in sub time frames to carve out some new areas of resistance. On the 4-hour time frame, this is a little bit better for that bear flag scenario. What we're looking for is a big long flagpole, tight contained range, and then continuation. 4 hours, bulls are managing to get over this EMA 12, currently testing it as support. We'll see if they are able to hold that support. They were not able to do it in the last 2 attempts, so we'll be cautious on that one. Hourly time frame. This is where we start to see that turnaround. What we need to do is break over 1805. That will show us continuing this hourly uptrend, and we also need to see if bulls are able to hold their new higher low, 1757.12. What that would look like is for us to come down, hold a new higher low, then get over 1805. That would allow us to see some continuation of the upside, still fitting inside this overall bear flag narrative. Should we lose 1757.12, we would look for downside movement and execution of that bear flag, eventually knocking out 1715.25, and then the other daily supports that we talked about. So right now, no major red flags for the bulls other than the fact that we have this potential bear flag pattern setting up. Watch those key levels, watch those trend changes. Those are your first signals that you're going to get into a dicey possible short entry position. That's it for today. Have a wonderful Wednesday, I think it is. Anyway, I hope you're enjoying the videos, and I hope you enjoy charts and technical analysis too. Hey guys, Jason for TheChartGuys taking a look at Tesla. Tesla had a great day today, and it was almost a perfect scenario. Yesterday's video, we talked about how we had a double bottom support, or we were in the area of a double bottom support between these two candlesticks. And when you get in these situations, what you want to see is a flush to that level, hold that support, and then ride the upswing. And then you bail, of course, if you break that level. So if we played an entry, let's say first thing, the bell rings, we place our entry, long position Tesla. We wait and we see if we break 225.75, we hit our stop loss, we're out of the game. If we don't break that level, we can either add to our trade or we can simply ride it out and see what happens. The stop loss and the loss of that key support is what's going to be the make or break for that trade. And it went pretty much perfect. Let's take a look at the 5-minute time frame. Here's our after hours action. We see some weakness. First thing in the morning, we see a flush. We hit to 225.80, 5 cents above our stop loss, our support level. And then we see a big move to the upside, and it just rallies for the duration of the day. Perfect move off of a very, very good and established support level. And now we're seeing hourly consolidation. RSI is at 57.75, so right in the mid-range, looking really, really good. Daily time frame, a lot of commitment and follow through. Not a great amount of volume on this. And we have a couple of key resistances to watch out for on the daily time frame in the area of 236.80, probably closer to 236.70 or something like that tomorrow. So keep an eye on the EMA 1226 levels. That's two levels combined. I call that a junction when we have multiple EMA resistances in the area in the same place. It is significant, and we do need to watch out for that tomorrow. We'll see how we interact with those price levels if when we get there. But good follow through and good close tonight on the Tesla daily candle. 4-hour time frame, looking for that trend change confirmation. We have a new higher low over top of 233. Now we need to see if we can get a new higher low. So we got a higher high over our important. These definitions are important. We got a higher high over 233. And now we're looking for a higher low or 225.75. So a little bit of a downswing is possible as long as we set a higher low. Keep on marching to the upside. And this is just another view of the same thing. So what do we want to see? We got our new high. We want to come down and carry on like that. Watching out for those daily EMA resistances. So why don't we just go ahead and mark those out? Might probably turn off my magnets for this to work. So I'm just going to look at that level, go back to the hourly time frame, and we can do something like this and see what happens when we get to those EMA 1226s. So let's see what our resistances are. We have 246.68 on the 4-hour time frame as our next resistance. Beyond that, 268.20. A lot of work to get there. For supports, we have 225.75, very important level, and then 222.25 on the 4-hour time frame. Below that, we have a little bit of support down here at 207.51. That's it for today. Good day in Tesla. Great setup, great trade. I hope you took advantage of it, or at least you can learn from it and take advantage of similar setups in the future, because that's what it's all about. Hello friends, Jason here for TheChartGuys. We're taking a look at Apple. On the daily time frame, we had a nice inside bar setup, and it looks like we broke both the high and low range of that inside bar. So that means we had a fake out in one of these directions, and those can be very, very dangerous if you're just playing inside bars and not really paying attention to what they're doing post break. The theoretical way to play, and this is a really, really basic way to look at an inside bar, is you buy in the direction of the break, and then if you cross back across that level, you bail on your trade and go in the opposite direction. I'm not sure if that would have worked in this particular example, because we will examine that 5 and 15-minute time frame together momentarily. But nice, solid day for the bulls. A little bit of chop. We broke our inside bar in both directions. Our next resistance on the daily time frame is actually going to be our EMA 12 or 26. We'll see how that plays out tomorrow. And our current EMA 26 is at 202.87. So very possible we'll get there tomorrow. If we manage to get there, our RSI will not be overbought, probably just mid-range, happy where it is, but looking for some sort of slowdown, probably in the hour and 4-hour time frames as we grind into that daily resistance. So let's check the 4-hour chart. Nice V-shaped recovery, and we are looking for resistance on the EMA 26 around 201.35. We'll see if we get there. Hourly may give us a little bit more information. We are setting higher highs. We did set lower lows with a drop to 193.82, but what's important is we got over to 198.80, and hourly bulls still in charge. We need to get a new higher low over 195.50. 54. So now I'm going to go ahead and clear my charts, take a look at the 5-minute time frame, and see what happened. Actually, I should not have cleared my charts. I was too eager. We are looking at the inside bar break, and we want to make sure we are aware of what those levels are. So I'm just going to simplify my charts by removing a couple of those lines. So here we are. Let's go back to the 5-minute time frame and see what we can learn from this drop. So here we go. We eat pre-market. We drop all the way down to 193.95. We broke that inside bar level. We see an immediate response to the upside. Upswing on the open, 196.20. We come back down and we hit 193.82. So let's go mark that out. See what our conviction was as we broke that key level, and if we had much volume, if we had much volume on the break. Thinking and running charts at the same time. I'm not very good at that. Too much going on here. I'm a very linear thinker. So here's our drop. We plunge below our break a couple times. The first time we do it, we bounce back up within 2 minutes. We see some hesitation. We see another attempt. Another break doesn't maintain below. Our third break does not maintain below. But what's important is not a lot of volume on any of those trades. So you could have been in and out of this trade for minor losses multiple times. If you got into this trade, took that bear break and bet short, covered your position on the retake of 194.04, reversed your position, you would be in fantastic shape. Again, very, very simple, probably oversimplifying the inside bar strategy, but that is the idea. A break will often give you direction. A reversal is a very strong signal that things are going to go in the opposite direction, and you need to be able to adapt and change with the winds, so to speak, in the markets. You never know what the market is going to do. We can get some idea of what it's going to do using our technical analysis, and that's really the entire purpose of technical analysis. Not trying to predict, but looking for scenarios and setting up plausible plans of action for when scenarios manifest themselves. So we've already covered the daily resistances. So far, bulls are very much in control. Hourly trend to the upside, we need to see a new higher low over 193.82, and we got some hourly support down here at 187.05 to keep an eye on, but no major red flags. Let's see what the market does for us tomorrow, and we will check in again.